Welcome back. Well, as promised, we have Mitessh Thakkar now joining us first for the BTST calls. Mitessh, what would be the calls now?
Yeah. So Anuj, I have a BTST on Page Industries. Keep a stop below 29,000. Look for 29,600 as the target area, and a BTST on Berger Paints and Asian Paints numbers are very good, and Berger Paints is making a fresh high. So good chance that this will see follow through tomorrow morning. That's a BTST with a stop at 812 for targets of 830.
Okay, now let's move on and invite our next guest. Mitessh, thanks a lot for that. Aditya Narain is joining us from Edelweiss. Aditya, good afternoon. We've hit 50,000 on the Sensex, and one thing which stands out is that most of the earnings, especially the old economy earnings, are beating estimates by a big margin. I mean, you would have seen earnings of Asian Paints, Havells, Bajaj Auto. So tell us, as as head of research, you must have been busy doing the number crunching. Is there a good chance of earnings revision after this quarter, or too early to take this call?
I think very much so. I think if you look at FY21 numbers, I think clearly you will see revisions. And that's coming from two things. I think after the previous quarter, the bulk of the street would have taken into account better margins, given what had been done on the cost side. But what has actually come through is, from a demand perspective, I think that's also been a little on the higher side. So effectively, I think you will see upgrades for FY21. I think you need to be a little bit more circumspect about the extent of upgrades for FY22, which is where the market has to actually keep its eyes focused and not necessarily get too carried away by what you're seeing in the current earnings round.
Aditya, good having you on the show today. Thanks for joining in on a day that's a milestone for the market, right? 50,000 on the Sensex. I was just going to ask you that forget FY21, this market is now pricing in FY23, right? So what do you sort of forecast? Because if I look at your strategy notes, there are interesting changes there. You are also looking more at economy-facing plays like real estate, for instance.
Yeah, so, I mean, to start with, I think 50,000 is momentous. Quite honestly, I remember when it touched 10,000. And there was a lot of celebration. This was seen as a massive landmark and, something nobody had believed 3 years prior to then that we'd actually get to. I think 20,000 was very, very different, because then everyone believed that everything would effectively tend to go on, because that was closer to the top of 2008, right? This time, while, obviously 50,000 is a huge number and a very high level, I think the reality is the view on the street is actually reasonably mixed and reasonably guarded. Or you have the bulls, but you have the flip side also. And I think that balance is not a bad thing for when you hit such landmark numbers. So I thought I'd just bring that up, because I think that is important to keep in mind. From our perspective, I think, to be fair, we've been reasonably circumspect in terms of how we are valuing the market. We are still doing it basically of June 22 numbers, because our sense is the biggest mistake you make is you start rolling forward to 23 and you start pushing it out further, right? So I think to some extent, I don't think the market is necessarily looking that far out in terms of specifics. But from a general perspective, yes, I think the market is looking at an earnings acceleration, which is much higher than what you've seen in recent years, and possibly a little bit more comfortable than what has been the case in the last couple of years. Now, I think one of the things to keep in mind is that there is a very large sensitivity of India's earnings to what's happening on the global side. I'd say almost 55 to 60% is directly linked in some form or the other. And in many ways, a lot of the earnings numbers that you're seeing are quite honestly premised on the global side looking good, or at least the global side continuing to get the stimulus that it is getting at this point in time. So there could be risks to earnings. There can be an apprehension of the fact that people are pushing out their numbers to 23 and valuing off it. The reality is, I think a lot of it will depend in terms of how the global side plays out.
Okay, for now, the market's just going one way, and that's down. The Nifty is now down 100 points. It's broken not just 14,700, it's broken 14,600. This is the 3 p.m. move which is playing out right now. And 14,530 is what we have at this point in time. It's just one-way decline that you're seeing right now. Just look at some of the stocks which are falling this hour. You have Tata Motors, SBI, Axis Bank, BPCL, IndusInd Bank, Bharti Airtel, HDFC, ITC, Reliance as well. So there's a bit of a sharp decline that you're seeing right now. Perhaps some program profit taking, whatever it is, but there's clearly a bit of a basket selling angle which is involved here, looking at the way some of the stocks, some of the big stocks have fallen. Aditya, what's interesting is that if you look at the model portfolio, you have 41% in BFSI. Isn't that slightly more than the market weight itself? And what makes you so bullish on BFSI still?
So yes, we are running an overweight, and that's the change that we made in our strategy over the last week or so, right? Now our presumption is twofold, right? One is that the asset quality side has played out much better than what most people anticipated, particularly the banks. Given that a lot of liquidity effectively came into the market, I think businesses also kind of covered up very quickly. And I think the reality is that the capital raising that the banks did, that provided them the capital to really cushion themselves. So I think that's one important element of this, that asset quality is probably in much better shape, or is much better controlled than what one would have thought. Now I think the reality, just give me a sec. I think what I do believe is that the market has factored in the asset quality gains, right, or the lack of huge losses as was being anticipated at one point in time. So that is in some senses priced in. What we are saying is that I think given liquidity, given that you're seeing signs in the economy that it is beginning to move, given that we think there is a little bit more risk appetite with businesses, and the fact that the government is likely to push towards infrastructure, we actually believe that the lending cycle is going to see a little bit of an upward push. You've been sitting at 5 to 6% growth levels from a loan growth perspective. I think that's going to start moving to the 8 to 10% levels over the next 3 to 6 months. And our call is premised on that the stocks have moved on the back of an easing of asset quality concerns or the end of the asset quality cycle in some senses. The opportunity for performance beyond the current lies in the fact that you should start seeing a lending cycle start. So that's where we are making the call. That's the big shift that we made in our portfolio. We don't see dramatic loan growth, as I said, but we do think that you could be rounding the ebb, and that from a stock perspective can be quite good.
Well, by the way, since we're talking banking, of course, a very, very different case, a very different kind of lender. But Bandhan Bank has given a guidance on credit cost, and it's a steep increase they're projecting from 3.5% to 5%. The stock's decline continues, just a one-way fall ever since those numbers came out. But that's, of course, specific more to Bandhan. Aditya, I just come back to that point on real estate, because I did notice that industrials and realty, I think these are recent overweights for you, if I'm not mistaken. They have a very small, percentage in the portfolio right now. What are you penciling in, and what's the advice here?
So two things. Industrials is a recent overweight. Real estate we've actually had for the last 6 months. So that's a continuation. We've just changed the stocks that we are preferring. So that's one part of it. In terms of the industrials, again, I think what has happened is that you've had some very dominant investing themes over the last 4 or 5 years. One of them has been consumption over investment, right? This has played through to businesses. This has played through to stocks. We think this dichotomy is going to begin to narrow for some of the reasons I mentioned when I talked about loan growth beginning to look potentially a little bit more positive. It's also the fact that stocks in that space have actually have rebounded a little bit, but structurally they have tended to go down. On the other side, I think consumption, while it's looking very good at the top end, at the broader end, I think there will tend to be some risks. So in our view, there is a dichotomy. There's been a big dichotomy there for an extended period of time. That is going to narrow, and that's why we pushed up the industrials on the back of an investment theme vis-a-vis consumption. So I think that's where we are coming in there, and it kind of aligns with our call on the banks. On real estate, again, as I said, we've been pretty positive there for a period of time, in large measure because we did see the liquidity come in, and some of the fiscal concessions have actually added to that. From here on, what we do believe is that funding has become easier, rates have come down, and we think that the activity in that space will actually stay at an elevated level. We are not making the call that property prices will go up. For us, it is volume, it is activity, and I think once that tends to get started, I think it tends to extend a certain. It goes on for a relatively long period of time. So from our perspective, if you get price, it's great. If you get volume, that's good enough, and I think you will get volume.
Okay, Aditya, we'll leave it there today. Thanks a lot for joining us. Always good talking to you. Have a good 2021. Serum Institute's Manjari plant apparently has caught big fire, but the vaccines are not expected to be produced at that plant. That's at least a bit of a relief. But I think I was just seeing some footage on Awaz. Okay, I think that's the footage that we have at this point in time. Hopefully this will be doused soon, and hopefully there will be no damage to human life for starters. That of course is most important. The market had a bit of a violent 3 p.m. factor, but it's now trying to recover a little bit. It's really been all over the place. Look at the bank nifty actually today. It's just relentless the way it's fallen, and I think today's weekly options expiry survey today, I think some of the put prices would have gone through the roof, and that can happen on weekly options expiry day, of course. But let's go across to Nimesh then to find out what all of a sudden happened in the market. Nimesh, tell us what happened.
Hi Anuj, I guess there was this the weekly expiry factor as well, which played out. But there was a sense even before that there is a bit of profit booking now. Once that we hit that 50,000 mark, there was across the board profit booking, so to speak, and even the mid caps had collapsed in the last 1 hour of trade. So that seems to be the clear feedback that there is this profit booking now that we've hit the highs, and the fact that the strong numbers are also getting sold into. Look at Asian Paints and all. So that's the general feedback. The flows are still positive from the FIs, so that trend continues. But there is a sense of profit booking, especially from larger institutions and from HNIs as well, after beating that 50,000 mark on the Sensex.
Okay, all right. Got that. Nimesh, of course, lots of earnings are keeping us very busy. But you tell us, what are the stocks on your radar?
So I'll quickly wrap. So there are a couple of stocks on my radar. The first is Kotak Mahindra Bank, a big block of 20 lakh shares. I believe one of the leading fund who was selling that particular stock has now finally exited, selling their entire portfolio. So that's something to watch out in days to come. V-Guard is a second stock, post heavily strong numbers. That stock is up 10%, and there is an expectation of a similar performance from V-Guard as well, and that's keeping the stock upbeat. The third stock is Tata Motors. It's not something which has been in portfolio of many of the larger FIs, and now it looks like there's a bit of scramble to buy that stock as well. So there is this FI buying in Tata Motors in today's trade. And the last stock is Federal Bank. It slipped along with the Nifty Bank, but some of the HNI seems to be active in that stock. And Morgan Stanley has put out a tactical buy with a target price of 90 on Federal Bank.
Okay, all right, Nimesh, thanks very much for the updates over there. Now, before we carry on further, let's announce the winner of our budget quiz, because yes, you came, you saw, and you answered. Thank you, viewers, for participating in the CNBC TV 18 budget quiz. The question was, which FM used these lines as part of his budget conclusion? And I quote, "We have sent notice to the world that India will be an economic superpower in the 21st century. The world's eyes are now upon us and we will deliver." The correct answer is Yashwant Sinha. And here is today's winner. Congratulations to Prathamesh Avchare. Remember, you can keep watching CNBC TV 18 and win prizes daily on the CNBC TV 18 budget quiz.